Let me know if you guys can see that. You should be able to just see my screen straight up. Tau. Okay, I'm gonna have this up just in case I manage to catch some sort of scalp on stream. Otherwise, we're gonna be looking at TradingView mostly. Right, there we go. Okay, so first and foremost, many of the plays we described, or the scenarios rather, and the trigger conditions for the scenarios we described in the previous streams that I did were filled in the dump last week, right? So just to show I'm not chatting shit, let me just bring this up here. If I go over to, which one is it? Is it this one? This one. Okay, if I go here, I should have it here somewhere, yeah. These are all the plays that got filled when I was away, right? So on the dump that happened. So PAL, Sol, we talked about this, right? So for example, if we go with that Sol play real quick, that was simply, if I go here, where is it? Solana. So we talked about how on Solana, if you lose that trend line and you lose that 2021 12-month seller zone low, your only next possible level, ignore the ones on the right, those are fresh, your only next possible levels are the yearly 2024 and these, right? So 133 to 126, we talked about how that was the next obvious level to get. So as soon as we lost that trend line, you can see we went and we based at that area, right? That was also basically a 0.618, very close to that. But we had a wick down. We filled that 126, so 2023, 2024, 12-month buy seller zone. We put a smiley face on there locally. So if I go to the hourly, you can see that here. Many of these ignore. So this right here, that's what we're looking at on the daily. Initial radar liquidity reconfirmation, that is what gave us that move up, right? And the move up took us straight back to the 2022 level. We rejected, therefore that's the short. And this is where I released the video, the last video I released a few days ago, saying if you're not long, please don't long here, right? Because now all of these are basically bearish back tests, right? Which is why I gave that warning. I released that video saying do not open any longs if you missed that initial dump down. And you know, hopefully no one did and tried to long out a FOMO, because you know everything has pretty much been retraced, right? But Sol's just one of them. Everything we went over on the previous streams that we did, they did get filled. Many of them got filled. Like I said, Solana isn't the only one. If you go back through those previous streams that we did, you can see all the different trigger conditions and the entries, the levels we talked about. It's the same. My levels don't change, you know. I talk about significant levels not having to change on a daily basis. These are yearly levels. They don't change that easily, right? So Solana's only a few of them. A lot of them did get filled, but these are all scalps, right? So if you did enter any of those scalps, that's why I released that video a few days ago saying I'm out, right? They're scalps. I'm not going to hold these for the long time. But what we're getting now is a complete breakdown, right? We've not lost the local range, let's say, but compared to what we were before, so our previous consolidation ranges, that is clearly a bearish back test, right? And that's not just for Solana, that's going to be for many coins. Same with BTC, which is why I also said I'm short BTC and I'm not looking to enter BTC here, because what did we do? If we take a look here on BTC, right? I released in the video I made, I said I'm going short BTC here. The reason this year I entered was because we said if you lost this range low, we're going to go to the fair value gap, right? This was the obvious fair value gap for me because this is the expansion fair value gap. So you have 1, 2, 3 expansion fair value gaps are really, really strong, right? This is not an expansion fair value gap. This gave you a retracement. I prefer expansion fair value gaps. So we looked at this. 78k was the mid you hit before you went up. But what did we say, right? We said this was the important diagonal for us that Bitcoin was ranging in between, right? We were ranging, we broke down, right? So now, even though we technically went and closed back above a yearly level, 2024 yearly level, what we know is in terms of diagonals, all we've done is a bearish back test, right? Which is why diagonals are so underrated and yet so important, because in terms of horizontals, if you're looking at this without diagonals, you might have been inclined to say, look, we've reclaimed range and we're going to go back up, right? But in terms of diagonals, you definitely have not reclaimed range. The actual trend over time that was giving you support was no longer giving you support here. Look at the close, right? That is the reason I went short. And again, in the video, I said, you know, I'm opening short here on Bitcoin because this was not looking good. Until we go and reclaim this, you know, that was a bearish back test, right? And the other thing I said was you give yourself a timeline. Basically, I've got until basically, let's say the end of March, start of April, plus or minus a week, right? Either direction. If Bitcoin can get above 100,876 by the time we get to this intersection, I think we are very, very bullish. Then I'll just be looking for a bullish back test, some sort of reclaim, even if we did get a pullback, and then expansion back to the upside. right? Because if we do that, we're saying we're going to be above a very key area in price, right? But we're also going to be doing so at the right time, right? And we know it's the right time because we're going to be within slash exceeding the trend that was laid out for us, right? If by the time we get towards this area and we're still below, then it's going to be that much harder for us to reclaim in the future, right? Because now that yearly level is going to be left behind. You're going to have this diagonal still providing resistance rather than support, so it's just going to be that much harder. So by the end of March, start of April, again plus or minus a week, let's say, I would love for us to be above 100,876. Right, so let's see how the rest of March develops, but that is what I'm currently watching right now. If you do go and lose 78k, then I'm looking down towards the next key inflection area, right? This key inflection area is the only obvious choice. If we go and lose this key level right over here. So again, we have a historical price range. If you lose the mid of the historical price range, the next area you're going to get significant reaction is going to be the key inflection area. The key inflection area right now is between 73k and 64k, right? So again, if you go and rate these lows, I would want that rate basically to come all the way down here, do something like this and go up. If you do get this and you start seeing successful back tests here, I don't need to explain why that would be very, very bullish. Right, previous all-time highs, again, 2024 all-time highs consolidation range, resistance being flipped to support, that'd be absolutely amazing. But let's see what happens, you know, on a day-to-day basis as well. But right now, you know, that's an extremely bearish back test, right? So locally speaking, if you can hold this level, you might see some more pumps back to the upside with a lower time frame smiley face, initial support, radar liquidity, reconfirmation of support. If you can hold this, right, maybe go back here and then go a bit lower. But if we keep staying below historical price range 5, right, the mid of this, then you know it's not something I would be super long on Bitcoin as a trader, right? As a trader, if you can reclaim this, at least you're reclaiming your range lows, you're reclaiming the mid of this range, so then you can talk about, okay, trying to go towards range highs again. But look, you got the breakout, you failed the retest, right? When you got to the retest, you failed it, you closed below. So let's see what happens. This zone, if this zone doesn't hold, then back towards the mid, in my opinion. If that zone doesn't hold, then just send it back down towards, you know, the key inflection area for BTC. Right, very, very simple. I'm gonna keep checking this to make sure there's nothing significant. Yeah, this is not tradable right now. This is just low volume. Okay, check the chat. Oh, bro, it's a Tower 16. I thought Tower just rocked. I was about to check it. Hyper 16. Oh, that reminds me. I think Hype hit that level we were talking about, bro. Finally, one sec. I'm going to be a bit incoherent today, guys. Just hopping all over the place. Just want to do more coins than macro analysis today. We will hit total and stuff in a minute as well. But did we hit? There we go. Boom. Okay, but we were waiting for this for such a long time. That means my limit's been filled. Not a strong reaction yet. So I might have to be a bit more active with the trade. I was waiting for this level for a very, very long time. If you guys have been watching my previous streams, you know I was saying this, would love to get this, would love to get this. Finally got 15.49. If we lose this, we go down to 13.28, and I think if we lose 13.28, you ain't got anything holding you up. You're probably gonna, I'd watch for the 886 basically on Hype. But this is the reason I didn't give any high plays on the higher time frame, right, as like a swing, because we just weren't getting any sustained closes above 2024 12-month seller zone low. And you guys know I love my yearly levels. There was no sustained closes above. Anytime you went above, there wasn't any strong retest. Anytime you came back down, you failed to hold. Right? It just wasn't very convincing what was happening over here, which is why I didn't really enter Hype. I was a bit patient. I'm glad I was, because we finally got this fill. I'm gonna have to be active with it because no strong reaction yet. But okay, that's good. Gonna keep checking back the chat in case you guys have got questions. I'm in at 24.2 and couldn't sell anything I was staking. Yeah, bro. When you're in a bull market, just in my honest opinion, just don't stake. Right? Staking's for when markets are downtrending. You're in a bear market. There's no hope in sight. In a bull market, just unstake, honestly, because 99% of the time you make more money just being able to sell higher. Yeah. You have to wait 1 week. Yeah, that's peak, bro. That's long. I didn't know I had to wait 2 years to get my pie. My pie's locked up till like 2027, I think, which sucks because I've been mining it for such a long time, and it actually came out at like what, $2? Could not sell. I was so pissed. But okay, let's we looked at BTC, we looked at hype, we've looked at Sol, we look at Sol again in a minute. But let's of course go over the master indicators first now, right? Dixie, real quick, let's take a look. Breaking down locally speaking, that's good. Below the 382, that's what we wanted, that's good. Bearishly retested this, i.e., we got the inverted smiley face scenario we were talking about here. That is good, right? So Dixie being bearish is the number one thing, of course, we want to see. We just want to see one final thing. Do this. Please just go and get below range highs, right? If you can do that, amazing. Then all we have to do is contend with the diagonals, right? But that is a very clear distributive structure for me right now. You could actually go ahead and call this a upside down head and shoulders, right? The problem is when you get these, right, people get very, very horny at the neckline. So oftentimes the neckline is where they just end up reversing it. So that's something I do not want to see on the Dixie, right? I want to see a clean break and some sort of lower high here, back below the black line, back below the neckline, send us lower. Just because seasonality wise, just in terms of historical price action, a bearish Dixie has always been the backdrop for crazy old seasons, right? So I just for that, I'd want to see that. USDT dominance. So the last time we were talking about this, we were saying, okay, if you keep holding a 6-month seller zone low, 4.35% into support, your next target is going to be, of course, 4.94%. Above that, the fair value gap, we filled that, but then we didn't get a bearish reaction off it, right? You got one close below, the next candle closed within it. So high volume buy candles as well in this case. I.e., this fair value gap gave you no resistance whatsoever, right? So then, of course, over the fair value gap, your next target was 5.53%, 6-month seller zone high. Same levels again we've been looking at. We hit that, right? Big rejection, but then again, this is another reason I was treating all those plays that I showed earlier as scalps rather than swings. It's because the USDT dominance went straight back down to support, right? So what have I said before? We said what we do not want to do is reclaim this line of best fit into support, right? You had a consolidation here, which is fine because consolidations can always lead to breakdowns, but this is no longer a consolidation, right? This is a move up and then a very, very clear retest into support, right? So, and you're once again above the mid. So the other scenario we were talking about, which is if you flip this into support and you especially get above 5.53%, the red box, the next scenario is you go and I would look for this supply line to be tagged again, right? So that scenario looks more and more likely, somewhere around 7% basically. Go take all these highs out and then perhaps go down. So one big range is where we're currently sat right now, right? So unless we can close the week with the SFP back below this red line, something like this, then it'd be harder to say we're going to go up. But as long as you're above this, again, this looks way more likely than us just randomly rolling over here, right? So let's see how this progresses on a day-to-day basis. That's USDT dominance. USDT plus USDC dominance, pretty much the same thing. A glimmer of hope in here in the sense that you bounced off an important diagonal, and where you're currently rejecting off of is also a diagonal, 764786, right? You're rejecting off that diagonal. You've hit that resistance block we talked about in previous videos. So if we can, keep rejecting off here, then we might, again, this might be the range that we're confined within, and we might not go that much higher, right? If we do, range here and then go back down, my ultimate target is still the 886, right? Give us this really nice bat and then start to form a bottom. That's where I'd be saying, oh yeah, it looks like, top is very, very close. Or if we flip this into support, then yeah, that's just going to be crazy. I think we run towards like 11%. That's not going to be a nice look. But let's see what happens at the resistance block first, right? So let's look at Bitcoin dominance next. Locally speaking on Bitcoin dominance, going in between buyer seller zones, Bitcoin dominance I'd rather look at from here. One sec, don't need this. Let's look here, BTCD. There we go. Okay, so Bitcoin dominance. Nothing much has changed since our stream. We're still chopping in between your monthly seller zone, right? So why is this a monthly seller zone? Big buy candle, this was the area where sellers took control even amongst the buying pressure and then drove the price down. Therefore, if this gets flipped to support, you're saying sellers are taking control of an area where if this flips to support, you're saying buyers are taking control of an area where previously sellers were in control, right? So obviously that'd be a bullish thesis for this chart. But bullish thesis for BTC dominance just means that liquidity is going to be flocking to Bitcoin for safety, right? That's it. If we get above 61.11%, right, that is what we're currently battling. If I go to the hourly, You can see that's what you're chopping about. Flip into support, flip to resistance, 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 resistance. That's what you're literally chopping around. If you can get above this, next target for now is 62%. This is based off the previous wick we put in. Right, so if you look at this, what I've done is mark out, actually I think it's the monthly. Yeah, I marked out on the monthly, this was the area where buyers were in control. I've just marked out the area where the sellers were in control on the monthly. So based on the previous monthly close, you do have resistance at 62.62%. If you get above that, then you have another block of resistance at 64.1 to 64.34%. But ultimately, I think if we do flip 62% into support this time around, I would just want to get this 1.618 out the way, right? Go tag the fair value gap. Stop at the 1.618, exceed it, I don't really care, but I just want this taken out, right? If this is taken out, there will no longer be an argument in terms of liquidity as to why Bitcoin dominance needs to come back here, and then it'll be much more easier to try and define, okay, have we topped out or not, right? Because now you're drawing liquidity, it's literally just going to be liquidity rates, no longer an actual liquidity pocket. So Bitcoin dominance currently underneath your 2019 yearly level, but you know, this is, as long as you're above here on the monthly, you're just low volatility chopping until the next, like, you know, major inflection happens that either drops Bitcoin dominance and we get money rotating into alts, or we get, you know, alts dying and money flowing into Bitcoin, and Bitcoin just keeps on pushing well compared to the rest of the market, right? So that's Bitcoin dominance there. ETH dominance, now this one hit 9.13%, i.e. it hit the low of this range we've been looking at, right here on the white. That's your weekly buy zone from history. We've hit the low of that, very close to the 886, right? Very, very close to the 886. You guys know we've been waiting for this 886 for a while. I would love to get this 886 right over here, right? I don't know if we base it, right? I can't say that. This is for now just the target, right? We might go below the 886 chop and then reclaim the 886 to put some sort of cumulative structure in. But now ETH dominance is at the areas where if buyers can base here, you have arguments for multi-year accumulation at these lows, and of course there's distribution at the top, but at the lows here you have arguments. You have arguments that could be made for multi-year accumulation, and also literally just in terms of TA, right? In terms of wave structure, that's a very, very nice area in terms of confluence, right? You have a BAT, you have an 886. In terms of your support resistances, you can see like support resistances from history where you've accumulated before is the area you're going to again. If you start closing below this, I honestly think you go and put a new low in on ETH dominance, which is going to be a very, very sad day, right? But that's why I'm really hoping that, you know, buyers do step in here and put some sort of accumulative structure, some sort of bullish structure in at these lows for Ethereum dominance, right? So nothing else to be said for here, right? Ethereum dominance getting towards the 886. Let's just hope, like, you know, bullish structure comes in here. If not, then that just means Ethereum's dominance is just going to keep going lower and lower and lower, right? Like, there's arguments to be made as to why you would want to be in, like, you know, why you would want to be bullish at these lows. If all structure is lost and a new low is put in, you do not have an argument anymore, right? Like, it's going to be so hard to back ETH if that happens. So that's ETH dominance. Let's take a look. Total, right? So these are the ones I want to be looking at. The yearly retest, hang on, let me do this so there's no confusion. Actually, I'll leave this as it is. Let's go back to this chart. I'll just do it here. Total, right? So the level we were looking at is this. I'm just going to recreate it here. If you go to the yearly, the main thing is here. There's your 2021 yearly levels, right? The same area we've been watching right over here, right? The 2021 yearly levels right there. And on top of your 2021 yearly levels, of course, you've got your monthly as well, right? There's your monthly is right over here. In terms of the total area where sellers were in control on the monthly, I'm going to put that on the right hand side. I'll put it as the macro read. There you go. In fact, I can just do this. There you go. And on the weekly, we know there's this. On the weekly, I'll just put a box down. There, right? So on the weekly perspective, of course, like, you know, that weekly top got voided is what it is, right? We're below it. But if you look at this, you expand your time frame still, right? On the ones that really matter. If you look at the monthly, firstly, you cannot call this monthly close bearish. What's happening right now, this candle is bearish, right? That is a very nasty SFP that is currently developing, but we have 27 days for this candle to close, right? There's no guarantee this candle is going to close like this in 27 days. We could very well retrace this by the time April rolls around, right? What's important is we have an area, again, in terms of price action where, look, buyers tried to take control back in 2021, utterly failed. No candle body closes above this area. Sellers were in complete control over the buyers. Supply was greater than demand, right? That is the narrative here before. You come back over here, this zone that's representing that in 2024, same thing. Buyers tried to close above, but look, you close below, right? I.e., this thesis is still the same here. Sellers are still in control. 3 years, 2021 to 2024, sellers are in control. And then you get the breakout, right? So this candle is now implicating that buyers have taken control over the sellers, the opposite of this, right? Buyers have taken control over the sellers, demand has flipped greater than supply. That's what this candle is indicating. And that was right at the moment, right? That was right at the moment. All the supply got taken up by this impulse candle, which is why we got this big move up. We got some sort of consolidation above, right? But this is now not indicative of whether the supply in this area is truly run out or not, right? How do we know that? We only know that when we go back into the area and if buyers then manage to take control. That is when you truly say buyers have taken control of this area, right? Because right now it's up in the air. If you go back into this area, are buyers still going to be in control or are sellers going to take control, right? We did not know this until this dump happened. This is now your retest candle. There's your breakout. This is your retest. On a monthly, we got a retest of the mid of your yearly level, right? So the mid of the level on the yearly where sellers were in complete control, the mid of that got flipped to support. And also on the low of the area where sellers were in complete control previously over the last 3 years on the monthly as well, right? You got to close above. So currently what we're saying is, okay, as long as now buyers can maintain closes above this buyer zone, right? Now this is the buyer zone, and let's make it a color we can actually see. How about something light, like something like this, right? Yeah. If buyers can maintain above this monthly buyer zone, there is no need to worry, right? As long as buyers can keep defending this area in particular, right, from the mid down to here, as long as this area is defended by the buyers, ultimately sellers have no reason to try keep on pushing this down. Right, as buyers can defend such a strong level, eventually you're going to go to where supply is, and you might, go back and go to 3.01 trillion, for example, right? Bearishly backtest that, or something like this, which you've already done. So if you go to the daily, what did we do? We had the monthly close, and then we bearishly retested, grabbed liquidity, came straight back down, right? But as long as we can hold this, we can very easily just sort of keep ranging for a bit until buyers step in. What we don't want to see is, of course, breakdown and bearish breakdown below this. If you do break down below this, then I'll be anticipating a wick down towards 2.19 trillion. On the higher time frame, that's not going to be bearish, right? And I mean serious higher time frame now, like if you're talking about years, because on the yearly, of course, any retest there is still going to be bullish, because this argument, sellers being in control of the buyers, still stands, right? This is the entire area on the yearly where sellers were in control of the buyers. So even if you do go and test the low, as long as you close above, what you're saying is now, this is an area before where buyers couldn't close any candle bodies on the yearly. It's flipping into an area where sellers are struggling to lose this area, i.e. buyers are taking control and closing candles within this area, right? So on a higher time frame, 2.19 trillion retest is fine, but now on a more local perspective, of course you want to be safer just on the daily, not on the yearly, right? If we go and lose this like this, right, I think we see a market-wide dump. And once again, probably Bitcoin down at like those key inflection area levels we're talking about, maybe even wick lower into the 60s, right? We'll see. So we do not want to see this scenario, basically. If we turn this into resistance, then this is what I'd watch for until we reclaim this level, right? So total one right here. But based on the previous monthly close, right, until we do go and lose that, we're fine. Of course, this monthly close right now is gearing up to be absolutely filthy, right? And not a good type of filth. That's a bad type of filth. But again, we have 27 days for this monthly close to actually confirm. So let's see how we develop over the next year, right? Let me delete this, and then I'll quickly check back to chat to make sure I'm keeping up with everything, and then we can move on. I'll do Sol again, Harsh, don't worry. But we'll go over ETH, yeah. ENA, yeah, we'll look at ENA, we'll look at Doge. Yeah, total on the lower time frame, total looks bad. On the higher time frame, it looks maintainable at least, right? Aave, okay, we'll go through everything one at a time, no worries. Okay, so that's total, right? Let's look at total 2 next. Of course, we've got loads of wave structures taking us higher if we do hold these levels, right? For example, if we hold this level, we literally have a 382, right? A, B, C. If we manage to hold this level, there's a 382. Minimum for a 382, we know is the 2.24, right? And these seem unlikely, but hey, these were unlikely when I first put them out, right? We put them out before we even broke out, and then that's literally where you went to top out, right? These levels were predicted way at a time. So all I'm doing is again predicting levels that might end up being key levels in the future. We have to wait for price action to actually confirm it. But as long as this level holds, we have a 382, right? Even if we go a bit lower, right? Like let's say we do go down towards here, we basically have a 0.5, in which case we actually look for the 2.0, which would send us even higher if we got that deeper pullback, right? So even if we do go towards 2.19 trillion, don't lose your higher time frame perspective, please, because even this is not a structure change on the higher time frame. You come down here, you flip it into support, that is a higher low on something like the weekly, right? Low, high, higher low, higher high, higher low. If you can maintain there, and that can very easily lead us to another higher high. Just understand that deep pullbacks are not uncommon in a bull market, right? We've had, if you go and look back at any bull market we've had at least one like 50-55% dump, right? It's not uncommon, so we're not going to be surprised if we get a market-wide deep correction, right? Again, my thesis is still the same. For me to be a macro bear, unless say on total 1, you need to break down and actually retest this area as resistance. That hasn't happened yet, right? It might happen, it might not, we'll see. If you get one more read on liquidity, there's a 618, we might bounce up as well, which would again give us the 1.618 way higher. I.e., we've got wave structures taking us higher if we manage to base anywhere within this 12 month level we're looking at, right, on total. So just keep that in mind. Total 2 looks the weakest in my opinion, right, out of everything, which is not, so it's not a surprise either. It's just, it's not doing anything. The thing we kept saying was, as long as you're below the 3-month seller zone, just don't do anything because you're below resistance at range highs, right? So there's your range, and there's your range high. Your mitigated order block is right over here, and then your 3-month seller zone, an area on the 3 months where sellers were in control, is right there. You didn't get a single candle body close above the mid, right? That was what we were looking for. At least close above the mid of this. That way you have a chance to push into here. We didn't get a single candle body close above the mid. We kept closing below, right? Therefore, you just kept spiking down. If you lose the range highs, your next obvious target is the range mid. If we go and lose this range mid, honestly, I'd be looking at range lows next, right? Yes, we have a yearly level here, but of course you can take scalps based off that, but for swings, I'd either wait until a cumulative structure comes in off this low and mid gets reclaimed, or you actually go down and actually rate the lows, right? Because at the middle of the range, you don't want to be taking any big plays, just scalps. So total 2 looks the weakest, right? I was really hopeful you'd keep pushing above, because buyers kept trying, but they just couldn't, right? They just kept closing below that 3-month seller zone. Look, the mid's here, right? So the 50% line basically kept closing below, right? So just not strong at all. And now you're once again below an area that was once resistance, right? So again, if you lose the mid, you're not going to be surprised if you do basically target this zone here. This zone here is where you're going to tag. Maybe even raid it and then reclaim and go higher. But that's why you really want to see this level hold, right? If this doesn't hold, this is where you're going to go to raid. Nothing else to say on total 2. It's a bit disappointing right now. But again, we do have wave structures on this, right? So if you can maintain closes at this area and not lose the mid, we do have a 0.5 that could take you to a 2.0. And if you can maintain closes here, we also have a 706, 707, and the reciprocal ratio for that's the 1.414, right? So we have other wave structures that can take us higher, but that all hinges on a bottom coming in at these levels, right? If you go and lose this, then the ratios go completely out of whack, right? So we'll have to look for new wave structures. So delete this for now. Okay, there we go. That's total 2. Total 3 was looking much better, and it still looks much better than total 2 does, right? Which is why, even though ETH isn't pumping, every time Bitcoin pumps, also getting huge reliefs, right? I mean, this for one is the complete opposite of total 2. Total 2, we know, broke below its order block, right? So if you go over here, completely below it. But if you look at total 3, for now anyway, above is mitigated order block. So an area where sellers were in control at one point, right? Buyers are still in control. You're closing above the mid of that. Supply zone over here as well, another bearish liquidity pocket, flipped into support, still above it, right? Your bullish fair value gap that was here, completely filled, still above it. So total 3 is literally above everything it needs to be. I do not see anything bearish on the total 3 chart. Okay, if you come in here, that'd be a beautiful high low. Look, resistance, flip to support, send it, right? Total 3 looks way better than total 2 right now, which is very, very weird, because normally you expect ETH to take the lead and then for alts to pump, right? But literally so far we've literally just been getting, ETH's been, yeah, it's been pumping and also just been outperforming. It's absolutely ridiculous. So as long as, yeah, I mean, total 3 very simple. As long as you're closing above this line, especially that white line, right? As long as you're closing above it, you're at range lows, right? This is your range, right here. That is your range right over here. This is what total 2 is within, right? You're above it, so then you'd be looking for, moves back up to the upside. Now if you do this, that is when total 3 starts to look like total 2, and you can expect range mid and range lows again, right, of this consolidation range. But as long as you're above, back up, which is why I'm also saying on a high time frame perspective, right, find alts that are areas where you can manage your risk. Find alts that you don't mind holding, even if you're a bit in the red for spot, because many alts are places like that. Manage your risk and just, don't be scared to at least have some exposure, right? Because don't get it twisted. Total 3, if it holds this, is not gonna go lower, right? This is a flip of resistance into support, and I would expect to move back to the upside. If you close below, you can just get rid of your alts, right? Of course, you can pair this with others' dominance as well. But where we currently are, right, especially if look at the monthly close we had, right? Absolutely beautiful monthly close. And all of these rejections, of course, we know is because you pumped up straight to that level we were talking about, right? The 2024, 2022 yearly levels. You pumped up over there. You couldn't close above, therefore you dumped back down. But Burj Khalifa doesn't necessarily mean you're going to keep going lower, right? So we could very easily base and then push up from here. In fact, I can give you price action similar to this on Bitcoin, if I remember correctly. If I go over here on Bitcoin, now where was this? Let me remember where this was. It was happening, was it this here? One sec, let me find it. It was here somewhere. Let me do this, one sec. Rewind. We're gonna take it to, I think it was here, because I remember giving this short. I think it's here. There we go. Yeah, this is also a Burj Khalifa. What did you do in this particular case? I remember very vividly. This was a short I gave in Unity. There was a 2-hour supply zone right over here, like this. Above that was a 2-hour fair value gap, i.e. resistance, right? You came, accumulated, went to resistance, filled the liquidity, went straight back down. But did you go on and keep dumping, make a new high? No, because you were above support, right? Even though that was a nasty candle, you were still above support. So we know what happens next. You didn't go lower, you had one more step down, and then all of a sudden you went straight back up to the upside. Right, so Burj Khalifas don't necessarily mean, this is it, we're gonna go lower, right? So the price action we're getting right now is that, right? It's literally that. We went up, we pumped, and we came back down. This doesn't necessarily mean we're gonna, go and make new lows, right? If buyers can come and base here, we can very easily break back to the upside, right? We just need to maintain this area. That is it. So that was total 3. Hopefully that makes sense. Let's look at others. Others, again, if you can maintain this area on others, like we, literally at range lows, right? Others hasn't done much. It's just kept on holding range lows. Even if you have one more step down, I would not care. I'm open down to 0.5, right? The 2021 12-month macro read buy zone mid, simply because if you go down to that level, you're going to get something that's even closer to a 786. Right, 786. There you go. There, right? You're gonna get something even closer to a 786. Even retracements down to here is fine, right? As long as it's a wick and you reclaim this range low with haste, right? Now we do know there is a bigger range here, right? And the bigger range, of course, is this. So if I was to do the range like this, I'm gonna take cycle from this high to this low. And did I pin it to the high? Yeah, I did. Right, that's your this consolidation range right here, in which case you're below the mid. So if you did lose 2021 Mac read buy zone mid, I'd be looking at 150.49 next, right? It's as simple as that. That's why I don't want to lose this level, because that's going to be a really, really big dump on alts if we do get it. And this wave structure is going to be completely out the window. We're going to have to look for other macro wave structures at that point, right? So let's hope that doesn't come to pass. But for now, let's focus on this, right? As long as this level is held, there's no reason worrying about this lower one here. We'd want to see wicks to this area, quick reclaim of this, get above the 0.5. I think that would set us up very, very nicely to just absolutely rocket to the upside on others. So this is the reason I'm saying don't be scared to have exposure, because yes, this is very scary, because if you lose these levels, you could have a market-wide flush. But also, if you don't, and even if you get lower time frame chop, but you maintain this, you couldn't ask for a better entry, right? Which is why spot, don't try to be a hero and leverage. We'll look at some coins in a minute. You'll realize you do not need leverage for your higher time frame plays at the levels many of these also currently at, right? 20-40-40, you guys know what that means by now. My own entry strategy, just employ that, right? If you don't want to go all in, just employ that. You don't have to go all in exactly at the low, right? But having some exposure can go a long way in helping you size up in the future, in helping you manage sizing up in the future, so on and so forth, and making it much less riskier for you in the long term to then enter at higher prices, right? Because now your average is already from the lows, so you just have to size up properly and to follow the trend and keep pushing it higher, right? Because invalidation is very, very simple, right? We've talked about invalidation. Look at others' dominance, right? Actually, no, before we do that, so that's others, right? At key support right now, hopefully that's very, very obvious. Even if you go down to 0.5, that is fine. Total DeFi, again, looks absolutely beautiful. At key support, trend being respected, no damage has been done to the chart. Beautiful area until proven otherwise. Why would you try to short this level? You wouldn't. You add support, right? The only way you get short here is if you now start seeing this. Then yes, get short because the trend is being lost. But you do not short here. If you're going to short, you short to these higher levels, right? The T2 that I gave, and then I said, look, we've got a lower high here. You know, we could see some lower time frame pullbacks back into support. That is where you look for shorts, right? When your 20 yearly levels are being turned to resistance, when you're hitting your terminal 2 for your actual harmonic, your take profit levels, that's where you look for shorts. You don't look for shorts once you come down to your significant supports. You don't capitulate at significant supports. That's the wrong way to do things, right? So if you go and lose this, then yes, get it done. Because even on the lower time frame, if you start doing this, right, then you can try to take lower time frame, short entry, so on and so forth, and just get out your short if you ever reclaim this. You'd have to be active, but you can manage your risk on the lower time frame here. But when the support is being maintained, 0 point going short here. And hopefully, I mean, everyone, all of you guys should know why I'm saying that, right? I'm not trying to sound like a dick or anything like this. There is no point capitulating. If you didn't sell here, why the hell would you sell here, right? Just think about market psychology, buying highs and selling lows. That is literally what you'd be doing if you sold here right now. So might as well wait for that confirmation, right? If you're here, you might as well wait to take a slightly fatter loss and slightly bigger loss and just sell at the actual confirmation, because if you're selling at support, that's the wrong way to do things. You don't have confirmation of a breakdown yet, right? So just my perspective on things, but we are at support, right? There is no way you can risk manage moves to the downside on DeFi coins when total DeFi is looking like this, basically. So that's the point I'm trying to make. Last but not least, let's look at others' dominance. So notice how even in the face of all the red we've been getting, others' dominance is holding like a rock, right? Because we know, and this is the reason I keep saying this level is very significant, we know your massive M shape, your godly PRZs here, your bad PRZs here, 886 and the 2.618, and in that recent dump we had, you also put in a butterfly. It's not an exact butterfly. Exact butterfly goes to the 1.272, but it's very, very close, right? So to me, that is a butterfly. You have 3 completed M shapes. 1, 2, you have 3 completed bullish M shapes, all at this area, okay? And look, week upon week, even though we're getting all this red, even last night we saw all that red, what is others' dominance doing is closing above. Now, of course, this will look much better if you can go and reclaim that trend, but on a horizontal basis, as long as you're above this, that's a very easy way to maintain positions on altcoins, right? Like I said, if you start closing below this, then get out. This wasn't a close, this was a liquidity grab, a wick, right? Which is why I say close. Now you can start looking for 3-day closes, daily closes. If you know, you can start looking at lower time frame closes. But the problem with lower time frame closes is you're gonna have to be way more active, because this was a lower time frame close below, right? This was a lower time frame close below. If you'd exited based on that, you would have been retraced straight away, right? So the problem with lower time frame closes is that you have to be willing to sell and re-enter straight away slightly higher, because it's just the benefit. The benefit of doing lower time frame is you can manage your risk really well, right? The downside is you're going to have to take more trades, right? Because of course there's going to be more chop on the lower time frame. So whether you go lower time frame or higher time frame, completely up to you as a trader, right? There is no right or wrong answer. You're just going to have to be, if you go higher time frame, you're managing your trades less, but there's also slightly more risk involved in the sense that, by the time, let's say the weekly closes, you might be down all the way over here, right? Let's say the weekly are closed here. You're down a good, wait, hang on. You're down a good, like 6% from the level, right? So that might be a slightly bigger hit across your portfolio, but you're also not managing as much, and you're also less prone to getting chopped out. Now, the benefit of lower time frame is, yes, the downside of lower time frame is, yes, you might get chopped out some more, right? You have to be more active, more frequent, but the benefit is you don't actually miss the move, right? You can manage your risk really well. It's less stressful in the sense that you don't have to worry about 10% drawdowns. And invalidation is super clear. As soon as you see a close like this, get out. As soon as you see a close above, get in. Right? You can manage your entries literally based like that. So whether you go higher time frame or lower time frame, again, it's up to you as a trader, up to you as a person, based on your personality. How much do you want to be active? Do you want to literally just lay back, be passive? It's up to you, right? You're just gonna have to manage your risk accordingly. But the key thing here is all is happening around this level, right? Because if we lose this and turn this to resistance again, this is your next consolidation range right here. You will not be surprised by a drop to the mid if we actually turn this to resistance. Which is what I'm saying. This is the area where you manage your risk, because there's no point trying to manage your risk. The thing people do wrong is, right, they think they need to buy at random levels like this. Oh look, we've wicked down, I'm going to buy here. That is a gamble. There is no reason for you to be buying here. There's no historic key support. There's no wave structures completing here. Nothing like this, right? What you do have significance is here. That's where your significant levels are. You can manage your risk. You can manage your story around why you want to be in very, very easy. Right? Because if you lose this, ultimately, this is where I'd want to enter. Right? So this is where you take the stab, because if you take the stab here, you can exit with minimal losses, right? And you know you stay out of the market until either this gets reclaimed or you go to those lower levels. You can be very, very patient, right? And then once future price action comes in, if accumulation comes in slightly higher, you can watch for that, right? But right now, where we currently are, you could not ask for a more significant level than this on others' dominance, right? So as long as this area here is holding, another reason why I'm saying exposure is, it's okay. Of course, like I said now, right, that trend that we're actually using, we keep staying below it. So, we can't be 100, we can't be like, completely caught off guard if we do break down, right? That's why I'm saying don't go all in 20, 40, 40, just initial entries, right? Whatever you're happy with. You can size up with that in the future once we reclaim this, for example, right? But, that would be nice, but for now, the level we're holding, you can't deny the strength that is coming in from the buyers here for this chart. That's the point I'm trying to make. So that's others, right? So let's look at total 3 against BTC. Total 3 against BTC also at very significant area, as we can see, right? Very reactive support resistance level. And the price action we're putting in here is a bullish harmonic, bullish 4-point wave structure, the PRZ respected. Double bottom, you're flipping this important SR level to support currently. So if this happens, right, I'd be looking for grinds back up. And that would be telling you, because this is total 3 against Bitcoin, that's telling you total 3 looks ready to outperform Bitcoin, right? Which means your alts on the total 3 as a collective are going to start outperforming Bitcoin. So again, another reason as to why I would not be completely capitalizing alts and so on and so forth. If you're entering spot, don't expect returns straight away, right? That is why you go spot. You don't have to worry about funding fees. You don't have to worry about, your account getting liquidated. So that's why I'm saying at areas where we currently are, just if you zoom out, you're not trying to catch a move from here to this peak. You're trying to catch a move from here to a reclaim and then to these higher prices. That's what you're trying to catch. And if you think about it like that, you realize spot entries to build slowly over time here is literally the move to go for most people, right? Unless you are a very proficient leverage trader, there is no point getting your account liquidated, money back getting smaller and smaller and smaller, when you could just slowly buy spot and chill. And you don't 20, 40, 40, you don't have to go all in. And invalidations is so damn clear. That's the main thing, right? I would not be telling you this if this had already pumped and we were up here, right? I will not be telling you this exact rhetoric once others dominance, right, does this and goes up here. I'm not going to be telling you, look, it's easy to manage risk, because it won't be. From here, you could do this, old school bleed, you'd still be fine, right? So I'm only emphasizing this right now because of where we are. You don't get chances like this often, right, where you're literally at the lows, everyone's shaken out, everyone's sidelined. If you're wrong, you're wrong, but you can't go into a trade expecting no risk. The question is, how good is the area where you're taking a risk? You cannot ask for a better area than here, in my opinion. I'll stop talking about this. I feel like I've ranted about it for a bit too long, but that's just my point on things, right? It's very easy. Even if you're wrong here, you can't, be mad at yourself, call yourself a shit trader, because you be mad at yourself if you start buying up here. I told people not to buy once we get here because you've hit the middle of the range. If you reject, you're gonna go lower, right? So if someone bought up here, I feel no sympathy for you, right? The warnings were given, because I said to buy here when the M shapes came in, when the type 2 for the bullish harmonic came in, when the trend was tapped, right? So if you buy up here, yes, that's completely on you as a trader. You made an absolutely terrible decision and you're paying the prices for it, right? But if you buy here and you get stopped out, that doesn't make you a shit trader. That doesn't mean you did something wrong. That just means you took a stab at area where it actually mattered, where it makes sense to do so, and the market moved against you. You can't predict that, right? All you can do is control your risk, and there's no better area for you to control your risk right now than literally, if you get below this, get out. As long as you're on top of this, stay in with like 20, 40, 40, like I said. You don't have to go all in, right? And you can change the ratios to 20, 40, 40 around however you want. Of course, I've gone over this plenty of times before, so you guys know what I mean. But just as a quick recap. But Bitcoin against gold. Let's see how that is looking. Weekly. Why does this keep changing? One sec. So there's your low. We're looking at this as a high. Just another one I'm watching because obviously gold's been tearing through all-time highs, right? So eventually I think gold will gas out at some point. We see some money rotation into Bitcoin. Simply going to be looking at the gold against Bitcoin chart to know when Bitcoin looks ready to outperform gold again. That's the only reason I'm looking at this. Nothing to say right now. Yeah, consolidation range. Apart from that, Bitcoin CME, right? So the CME gap also got tapped on Bitcoin on the weekly. If you look at that, that's what gave us the move up, and then we got the move down again. And this new CME gap that was formed, that has also been taken out now. Right, so I think 4 hours, I can look at it. Yeah, the new CME gap's also been taken out. So no point putting this here, no point putting this here. We don't have any new CME gaps right now on Bitcoin. But that is all the macro indicator charts I wanted to go over, right? So now we can move on to actual crypto. So let me quickly check back in chat to make sure there's no more questions. Yeah, market sentiment's definitely changed. We can't be surprised it has, right? With all the like negative news and stuff that's come out as well. And it's not just negative news. The thing is, we do have positive news as well, right? Of course, like the strategic reserve being announced, so on and so forth. But positive news doesn't always mean, oh yeah, let's reverse now, right? In fact, news typically always tend to be pump and dump events anyway. But market sentiment's changed. That's fine. The thing, in my opinion, that we should really care about is literally just pure TA, right? If your higher time frame bias hasn't shifted, then you do everything you can to just make sure trade the lower time frame, manage your risks on the lower time frame, but keep the higher time frame perspective in mind, because TA will always beat news, in my opinion, right? Always. Literally, just look at what Bitcoin did. ETFs got announced somewhere up over here, right? The actual lows, all the bullish thesis for Bitcoin was coming in, especially since over here. Right, like the sounds of bullishness were coming in here, but the trend shift, the higher low came in March 2023. ETFs weren't even like announced here. They got approved once Bitcoin already pumped, i.e. the news was priced in. After that, it was just like the catalyst, right? That was it. So more often than not, TA will always outperform news, right? Many times. Even if you look at like the COVID crash, anything like this, you will find distributive structure. You will find like signs of weakness of our pivot areas, like way before the actual news came out, right? So in my opinion, it's just TA. If you focus just on TA, it becomes way easier for you to manage your emotions, especially with literally bullish news today, bearish news tomorrow, bullish news today, bearish news tomorrow. You're going to get swept left and right. It's like being inside like a washing machine as like a cockroach or something, right? You know where you're going to get your bearings. So I'd just say, just TA, that's it, personally. Oh yeah, there is. The CME gap didn't get filled straight away, the lower one. Yeah, there's a little bit left there, you're right. But yeah. So this is what I mean. We can turn bearish very quick at the levels we are at, right? That's why these are so significant. Buyers need to defend it. If they don't, we can flip to being bearish as well, right? Especially if we then start putting bearish back tests in on the higher time frame. But until that happens, it's yet to happen, right? So for now, let's see what happens. That's it. You just manage your risk at areas. Like like I said, if you look at total DeFi, if you look at others, right, is risk to reward favoring shorts or longs? Obviously longs. So that's the side you go for, right? Very simple. Based on the risk you take here, what side's going to give you more reward? You simply trade based off that. But okay, let's go. All right, let's go to look at some coins next, right? So Solana again. Already explained this earlier, but since someone was asking about it, let's look at this. Off, so you guys don't get confused for now. High time frame wise, we hit our key levels, right? We hit the 2024 12-month level, 2023 2024 12-month level. Again, this is my own system for anyone that's confused. My own way to get support resistances, right? Well, we lost the 2021 yearly level, therefore this was the next obvious answer, right? Which is where we went to. As long as we can hold this now, you can see obviously resistance, support, at range lows. You wouldn't be surprised if we did reverse from here. If we did go and turn this to resistance, however, yeah, you're going to get 100, maybe even double digit sold next, in my opinion, right? So you have a big cluster down over here between 102 to 78. I'll just wait for something to happen over there. if we go and lose this. I wouldn't buy any SOL until you either reclaim that or until you go down and you start seeing a cumulative structure come in at these next key areas. That's it. Right, on the lower time frame you can trade level to level, right? So 102 to 94, that's a nice short, right? On if you're doing scalping, 94 to 85, again, that's a nice short if you're scalping. So now these levels you can scalp within when you're there, and then just watch for a higher time frame, a cumulative structure to come in, a base to form, and then you enter your higher time frame swings there. But if you're going to take a risk here, right, the risk is super easy to manage in the sense that, okay, if you wanted like a easy thing, to be honest, it's still a bit too wide for me, right? I'd definitely do lower time frame entry models on this, something like this, right? On Solana, trend line is over here. Where's the risk reward of 3? Yeah, that makes sense. Do something like that, but this is not a high confidence entry for me right now. In fact, you look at the daily, I'd go to the 1 hour to manage entry models even, right? So if you decide to enter, as long as you're above this, you're fine, right? So based around just this level, I'll do something like this instead. Stop loss below, 3% stop loss, right? Something like this, and then go higher. If you get stopped out here, it's fine, right? Just wait for the reclaim. Just trade with less size if you're not confident. Either wait for the reclaim or wait to see what kind of reaction you get at the next key level. Do it based on that. Instead of the higher time frame, I'll just do this right now. At the end of the day, it's proven to be a scalper's market so far, right? So just go for lower time frame entries. If you go on the 3 minutes, of course, even tighter. Right? The lower the time frame, the tighter it is. And of course, you don't have to put your stop loss below this. The reason I'm doing this is because I'm accounting for previous chop. If you want to keep it tight, you can just go below this retest wick, something like this, or even something like this. So risk management is completely up to you how you put your stops, right? For me, doing this makes sense because we've had that, chop down there before, and that's going to be a risk reward of trade more than worth it, right? Risk reward of 3 is literally just going to take you towards this area, which seems very likely in a lower time frame pump. So you can lower time frame, you trade around these levels singularly. Higher time frame, you watch as a collective for a bottom to form at these key areas, and then you execute based off that, right? But once again, if we can base support here, we can put a cumulative structure in, locally speaking. So I'm very interested to see what does happen over here, right, on Solana. So that's Sol. Let's move on. Solana, let's look at Injective. Absolutely terrible on Injective, right? I'm not in any inch. As soon as the lower high came in at this key area, right, that was when we said, yeah, Injective doesn't look good. And then you started closing below here, we were out, right? We closed slightly in profits before we got stopped to break even. I'm not in this until at least $9.87, I reckon you get to here. You're at your next historical range mid, right? There you go. If you can base it this area, hopefully you can see why this is now important. Support, resistance, support. If you lose this area, you're going to get $6 to $4 Injective. It's amazing how quickly markets can change, because Injective was honestly looking like one of the best coins when this community structure over here was going on. Not that one, this one here, and then you hit your target. This is why you take profits, right? So we took some profits, we went risk free, it went against us, is what it is, right? When you 2x, take some profits, put your stop loss to break even. Yeah, so now we're going down to new range lows. In fact, on Injective, do I have any? 1 second. There we go. Right, I do have some wave structures to dish out over here. So you're below your ABCD 2.618, right? From if you do ABC, your D's there. Your 2.618 has obviously been turned to resistance. If you look over there, consolidation, breakdown. So your next key target, in my opinion, is the 3.618 of the ABCD, $8.59. Basically, $8.24 to $8.59 would be my ultimate low for now. The reason I've got this marked, of course, is that's the resistance level, right? That's that key inflection area we were looking at just over here. That's where we are, the range mid. And depending on how deep we go, of course, let's say we go for a really deep pullback, we do go to fill those key inflection areas. In fact, you could probably set some sting bits for this. If you do go down to fill that key inflection area, basically if this box is lost, this is where you're going to go to. Don't get it twisted. Okay, you are going to go to here, as unlikely as that seems now. Below this is the new range you're in, right? So you have the range mid. If the range mid is lost, you're going to the range low. If that does happen, then what we have is you have a potential, this is a deep crab, right? 1.618, 886 basically, you have a deep crab. What else do you have? I swear to God you have more. You have this ABCD that's just been hit as well, right? The 2.0. It's not been hit yet, but that's one reason why we could base off this area that we currently are here, right? We do have an ABCD completing there, as you can see, the 2.0. But if we lose this level, then the 3.618, right? This zone, we need to hold it. Otherwise, we're going down towards those lower levels. I'm sure you had more XAB, not this one. There we go. Right, you have a macro shark XABC D886 all the way down over here. So you have a nice little PRZ basically at this area. So that's beautiful because this PRZ basically lines up with, come again, your range lows of the range you're currently in. Right, 692 to 488. You have 621 to 414. Right, so a little bit of a raid in here, but if you get that on inch, that's going to be the next area you buy. In my opinion, that's going to be a really good bid on inch as well, because obviously deep retracement, right? That's going to be like 88.6%. That's deep value. So that'd be something to watch. I do have a soft spot for this, right? I bought a shit ton of inch back in 2022, right? Average was like $1.20 something, I believe, and then this went absolutely haywire. So this has made me a lot of money in this move up. So you know, I've got a soft spot for this. I'll look to, like, I've still got a little bag of that left. Like, I've not taken everything. The moon bag's still left over, so I'm more than happy to size up when we get here. But yeah, we'll see what happens. It's just a shame. It was looking really, really good there, right? Previous all-time highs where you distributed, you all of a sudden you're accumulating. Price action was agreeing. Your high time from yearly levels were agreeing. You got the pump up, right? We read it right. We got the pump up, but you just couldn't get follow through. The overall market conditions weren't there. So then, you know, you get the move down. So that's what it is. But that's Inge. Ethereum at key inflection area still, right? Until this is lost, I don't want to be a bear. But if we now do go and turn, which we've already seemed to have done actually, if you're below the mid of the key inflection area, right, that just increases the likelihood of you going down to this range. So you have a saving grace at 2030 right now, right? If you get below 2030, if you do this, make no mistake, $1,500 inch is going to be in the doorstep, in my opinion. Right, so that's going to be very juicy. If you lose that, you're going to get $1,000, maybe even sub $1,000 inch, ETH again, which is going to be very, very nasty. So basically, if we do go and we start still distributing over here and we start closing candles below here, I'm going to severely cut my ETH back. Around 6 figures deep, I'm going to cut it. My average, luckily, obviously I've been bidding this since 2022, so my average is lows of this range, right, below the mid. So I'm not that interested in cutting yet. But if we do close below this, I'm going to cut like half, 70% of it off, because I will more than happy to just size up over here. I'm more than happy to size up. I've taken profits. Whatever's left over of my bag, I'm more than happy to size up on once we actually do reclaim this as support. But if we do break below, there's no way I'm holding this, because that can be a nasty, nasty wick down.
Yo, what's up, Ova?
Yo, what's up, Caleb? How you doing, brother?
Yeah, I'm doing very well, bro. How's it about yourself?
I'm good, man. I'm good. Thank you. I'm good.
Nice. Enjoying the nice weather,
Yeah, bro. It's
weather
sunny
man?
as hell. It's really, really sunny. It's been sunny for the last few days, man.
Yeah, was the weatherman predicting this weather?
No,
Like, yo,
no, it wasn't. I thought
very-
it'd be grey as hell.
hey, it's actually lovely.
Yeah.
It's honestly very blue skies. Yeah, man. I hope you had a good birthday as well,
Yeah,
bro.
bro, it was good. Thank you very much, man. It was in Malta for that. It was really nice. Just found out the other day
Yeah,
Tip was there too, but
I know. I
yeah,
know. Yeah.
yeah, it was good. So went to Nepal for a bit. So I went across Thailand and Nepal because I was just doing maintenance checkups on my properties there, and then on the way
Yeah.
back I thought might as well stop over, treat myself, and then came back. Yeah,
Nice, nice, man. Crazy, crazy price action since Sunday, eh?
yeah, bro, it's been ridiculous. It's been
It's
all over the
wild.
place.
I had a lot of short orders set. I was looking for cash to come down to 4.55.
Yeah,
I had a box range of like 4.62 to 4.5, and unfortunately it just missed my short region on Bitcoin as well. I was looking at 95K,
yeah,
and then obviously yesterday I had that massive dump as well from everything that was going on in the stock market. So yeah, been a crazy start to the week. I was kind of letting Monday range form yesterday. I did have a short on BTC, but that's about it.
yeah.
And then even now with New York today, I think we're probably just gonna chop, but we could also have a further sell-off because right now that's how it's looking.
Yeah, bro, for sure. I've got three hedges open right now. I've got Solana, BTC, and Trump. Those are the three shorts I'm in.
Nice.
The longs that I filled in the dump last week, I've TP'd on. When I released that video, I TP'd then, luckily. So those scalps
Yeah,
filled, TP'd, and then, yeah, just wait for more chances now. It's areas where you can manage your risk, but without confirmation, it's hard to deploy. It's one of those scenarios.
100%, 100%. I can't believe what happened on Sunday though with Trump tweeting about the fucking, it wasn't even a tweet, posting about on Truth Social, a social media platform,
Yeah,
the strategic reserve. And obviously that's not going to happen for months on end anyway. So
yeah,
yeah, we'll see what the summit brings on Friday, but most likely it's going to be a further sell-off.
yeah, yeah. I think I don't know if this. I think this is just like speculation for now. But I saw something earlier. Apparently, he's gonna announce to like leave NATO. I don't know if this is true, but I don't know what that's gonna do to the
Yeah,
markets.
yeah, it's interesting right now what's going on with obviously NATO, European Union is very corrupt anyway,
Yeah,
right?
bro,
But
scoundrels.
it's there's a lot of stuff which is happening with the Ukraine and Russia war. I actually have a friend of mine, his baby mama, she used to work as a PA for a billionaire who's an arms dealer, right?
Jesus
And
Christ. Yeah,
yeah, she works for a new billionaire now, right?
yeah,
But the previous one had like $13 billion to his name, right?
hmm,
He works for like, I think he's got Putin on his phone book and stuff.
yeah,
And obviously, when it comes to the Russian-Ukraine war, a lot of people that don't really know what's going on, they just listen to the news. So people in Europe, they're like, "Oh, poor Zelensky," right?
yeah. No,
Because
he's a
that's the
fucking idiot.
narrative which is pushed. But most people don't know the truth about obviously how it came into fruition.
Yeah,
Don't get me wrong, Russia actually invaded Ukraine before that NATO was trying to pressure Ukraine to join them, right?
yeah,
And give them funds. So Russia did invade first, but there's a lot of reasons for it. There's a lot of money being made, which is why the war hasn't stopped in so long. Obviously, war is never good for the markets, right?
exactly, bro.
Especially now they're pushing it. Like what happened on Trump and Zelensky interview that was such like so fake, you know?
Yeah,
Especially right after all these European Union officials start tweeting out, "We're here for Ukraine." I think the UK's just started sending troops over there.
yeah.
It's crazy, bro.
Is
It's
bro. It's
crazy.
funny as well, cause the one of the main reasons this even happened was so the fucking Vanguard and BlackRock could buy up all the Ukrainian land. They privatized it.
Yeah.
And then the war happened, and now they bought up all the land they want. All of a sudden, they're like, yeah, your soldiers are dying, stop the war, do the peace. Yeah,
Yeah, you know what it is like the Rockefeller Foundation,
yeah,
BlackRock, the Rothschilds,
yeah.
these are the people making
The
these,
reptilians, bro.
you could say reptilians, you could
Yeah,
say Zionists,
yeah,
you know, Satanists, whatever, but
yeah,
there's definitely, evil at play, and it's coming from these families again and again.
yeah, exactly.
But yeah, man, I think we're in for an interesting March, my friend. I'm gonna be heading off to Thailand in a couple of weeks,
Oh,
which is gonna
nice,
be
bro. Nice. I think I'm gonna be there
yeah, it's gonna
myself in September for I think going for like 2 or 3 months.
be okay,
Yeah,
sick.
we can
Yeah,
definitely we can plan one together in the future, bro. I've got houses there, so we can like
bro.
chill and stuff.
Yeah, definitely, man. I got people out there anyway, so that would be dope.
Yeah, yeah, sound, bro. Have a good time when you're there, man.
Yeah, I appreciate it, man. I'm looking forward to it. I'm going with my brother, and then as I said, I've got some people out there.
Yeah,
It won't be like too loose, you
yeah,
know what I mean?
yeah,
I was originally just planning to go to Koh Samui,
yeah,
get like a nice apartment with like a pool, sauna,
yeah,
gym, just train good, eat good, and yeah, get some sunshine. But now it's like sun's coming out in the UK. All right, cool. Now my brother's coming. It's gonna be a bit loose,
yeah.
you know.
Normally,
Nothing.
I go for a few months every year normally because I relax for a month or two, and then for an additional month at minimum, I go just there at Muay Thai gym because I got some friends there.
Yeah.
But I didn't go. I wasn't able to go last year because I just went to other places. I didn't go last year. That's why I had to go. I went this week to check on the properties there. I couldn't do it last year. So,
Mm,
but yeah, it's always
yeah.
fun there, man. It's good. People are good. Vibes are
That's,
good. Food is good. Your pound goes a
yeah,
long way. So
I was thinking about getting a property out there, but I need to see if I like it
yeah,
first because I know it's very torrential weather as well, right? Like it
yeah,
can be pretty. Mm,
yeah. It is.
M55. I got some new alerts which I set up on Oracle Algo, right? So basically on the oscillator and EMA,
Mhm.
it gives alerts, and they've been pretty accurate so far, to be fair. So I've been using those as sort of trade ideas. Just reminders on TradingView, different pings that come through on NQ, Cash, Bitcoin. So
But
much
if we
blood.
go to master list, one sec. What about others dominance? There you go. See, this is what I mean. As long as this is holding, that's the important thing on the macro. Okay, so let's go back to ETH here once. ETH, yeah. So basically, guys, on ETH, if this is lost, expect 1,500 in my opinion. I don't see why you'd stop it off in between, unless it's literally just a quick wick, right? And then you reclaim. That's when you'd re-enter. But below 2030, you've got no business being in ETH. Okay, if you're looking at fresh positions, you're gonna get, I think, mid 1,500, somewhere around there. Basically, the mid of this. Right? That's what you're looking for if this goes. And on the macro, as bearish as that seems, you'd still be fine because my limit is the 886, right? 886 deep retracement, obviously deep value. 886 is, of course, you want to be bidding. So if you do pin this all the way to an 886, you're basically looking at a wick into the low 1070s and then higher, right? This deep butterfly would still be in play, even if it did go down here. But if you do lose the 618 where we currently are, right, so somewhere around here, then around the 786 will take you to the mid of this, right? That'd be your next stop off point, and if that's turned into resistance as well, that's when you just say, okay, well, fuck it, 886 is probably where we're gonna go, somewhere around here. Let's see though. If you can base here, of course, we're not gonna see that, but if you can't base, then yeah, that might be it. But what we might see is, of course, this is now a bit preemptive of me, and if I have to make sure of something first on the higher time frame, do we have liquidity pockets down over here? We do. We have monthly fair value gap here, for example, right there. So, do we have a reason to have any sort of accumulation, manipulation, and distribution going on in this area? And the answer is yes, right? You can see this is very clearly a big range. There's your PO3 start, right? There's your A. Your M could be something like this, manipulation to go into a higher time frame liquidity pocket. And if you reclaim this, then you're going to be in a distribution phase, right? So for the distribution, I'll just take it to the 1.272. Something like this. So we could get that. We could have something like that setting up on ETH, but this is now very preemptive of me. Like I said, you could just die, in which case this is just going to be no, it's not going to be there. Right, so just an idea for now on ETH. But yeah, below this, you know, I think just have a target for like 1,500, somewhere around there. The historical price range to mid. That's where you're going to go towards. So we've done Inch, we've done BTC, we've done Sol, we've done ETH. Let's see what Aptos. This one was holding like a rock. And it seems to finally be trying to get below this, but this one has held up really, really well against considering everything else has been absolutely dying. Aptos has held up really well, which begs me to differ. One sec. Okay, we'll look at this in a minute. Let's look at Aptos first. The reason previously I said to not get into Aptos, right, if you're not already in from down here over here, is because you're up against yearly levels, right? 2023 and 2024 yearly levels. You can see why I keep saying that. Every time you go here, you have no sustained closes above yearly levels. Right, this is why you take price action around these significant levels very seriously. That's where it matters, right? So we've gone back down to the PRZ of these harmonics. Right, below it for now. That's fine. We have the 0.5. If you can base here and reclaim, play the range again. You're playing the range. If you do close below the 0.5, then I'll be looking at this range over here between 460 and 432 again on Aptos, right? And if you lose that, then 340, 3.447 on Aptos, very simple. But what we don't want to do, of course, ideally we don't, you know, start closing below the 0.5. But if we do, then we don't want to get below this, because then you've lost, like, you know, higher time frame structure's been lost. We'd have to look for like alternate bats and stuff to come in at that point, right? You'd go down towards $3 Aptos if that happened. If it happens, I'm just gonna add big bags of spot and, like, you know, just open up some fat leverage swings, right? Just low leverage, size up, and just hold it. So the funding fees don't really rake you over the coals. But right now you're still range bound on Aptos, right? You're still range bound, so don't do anything crazy until you break the range. Here's your range for now. In fact, you could literally just say your range is here. One sec. If you did this, there we go, and there we go. Actually, you know what? Yeah, well, let's take this as a full range for now. There's your range. You know, as long as we don't go and void the range lows, and we don't close below, like even if you go below wick and then reclaim, that'd be nice. You just play up to the highs again, and hopefully, you know, the next time you flip this and we go, right? But if not, and you start closing below this area, right, then of course this, and then $3 straight away. Aptos has barely any targets to the downside. Its targets I can't imagine hitting, right? It's like literally down to $1. I just don't see Aptos going there. It's a layer 1 in use that's prominent, right? I just don't see Aptos going down towards $1. But of course, never say never is crypto. That's why, you know, just work level by level. But for now, you know, your next key level is going to be at $4.32, and then a $3.47 if you get below $5.25 on Aptos. So let's take a look. AVAX, this was so disappointing. This was a beautiful area to hold, but right now you're breaking down. Okay, below this level, $17.29 AVAX, I think you get that. If you lose $17, I'm looking at double digits AVAX, sorry, low double digits, like $10 again. So let's hope we don't lose $17, because if you don't lose $17, even though this structure would be voided, your macro structure is still fine, right? In fact, if you're looking at these as these harmonics, you can get below $17, right? So if I was to do this, I was to unlock this, and you could go towards an 886, right? My cutoff point for AVAX would be this 886. If you get below this 886, I will no longer be looking at AVAX until this is reclaimed. So somewhere around there, right? So what you want to do is basically between this and the 886, right? If you do go there, reclaim real quick, confirm that's still the low, and then go higher from there. Right, so since that is lost, that's the only other hope we have. If you get below that, like I said, look, between $10 to $8 is where you're gonna go. So that's just something to consider on AVAX. Say, this is another one that was looking absolutely beautiful, but yeah, market conditions, no follow through. You had a weekly breakout and a weekly retest, right? Breakout, weekly retest, above your previous consolidation lows, above your mitigated bullish order block, but then the confirmation candle just completely nuked again, right? So you can once again arrange lows. Maybe we get one more drop down towards the 886, 0.17. This is something I would not want to be getting below though, because below this is, what do you even have, right? Back towards like 11 cents, maybe something like that. So again, at areas where it's very easy to manage risk if you can maintain your emotions. 20, 40, 40 if you want to get in, okay? And do not try to leverage this, just spot for now. There we go. But yeah, this is also looking a bit nasty. Front ran the yearly, and then yeah, back down you went. But 886, you're above the 886. As long as you hold the 886, you are fine, okay? On say, see what else can we see on this? That has been filled. Yeah, that's been filled pretty much. Yeah, the mid of that's literally been tapped. So then you could argue for this perhaps, right? So you have like a liquidity raid region, so on, let's say, right? Maybe something like this. But the main thing here is to reclaim 0.2026 as soon as possible. If you do get below, just reclaim that as soon as possible. Below that, you don't have any of the yearly levels, okay? So it's like free fall time basically. You're gonna have to rely on other forms of significant levels to actually try to catch the bottom on that. SWI 86, very very close, right? We've been waiting for this for a while. 86 around $2 basically is going to line up with the 2023 12-month seller zone high, and this is one that looks good because even after all this dump, that 86 is going to be a bullish back test of this breakout. We haven't had it yet, but that 86, something like this, would be a bullish back test of this breakout, right? So basically just to see what kind of reaction you get once the 86 hits. If you start, just slip in and closing below, it's voided for now. Just wait until you either reclaim or you go down towards $1.38. But if wick below, close above, that's where you manage your risk around to try and then get into positions for the higher time frame, right? Very close. Hopefully Ondo's close to, there we go, that's what I'm talking about. I gave this one in my last YouTube video I released like a few days ago. This is the short I gave on that video. This is up quite nicely. Ondo, same as SWI, I'm waiting strictly for, this Gartley hasn't technically hit yet, so that'd be the first trigger point. We just have a big PRZ, right? Look, 886, 886 if you get below this area, and last but not least, ABCD. So this entire area, basically from here to here, is going to be a nice PRZ for Ondo, right? So somewhere here, as long as you can base a bottom, that's where I'll look to get in. If you don't and you go straight below, right? Let's say you go to lose this 2024 12-month macro read buy zone mid, I do have a feeling you will liquidity rate to that level, something like this, and chop before doing up. If you do get below that, however, this zone, Ondo is going to free fall. You're going to take out all of these wicks here. So again, we're approaching areas we need to hold, right? Approaching areas we need to hold. Your The obvious target for me would be here. Of course, you add literally your key support resistance right here. But for me, I value wave structure as well. So the wave structure tells me a bit deeper wick. If you lose that, your saving grace is this 6 month / yearly level zone over here. You do not want to get below that on Ondo, right? So if you want a cutoff point for Ondo, in terms of, okay, where do I not want to hold this, is between 0.68 and 0.61. If you get below that zone and you start closing below that zone, just cut until this reclaims at a minimum. Okay. But otherwise, this area here is where you're going to look for some sort of bottoming structure to come in before you then deploy for spot for higher time frame levels, right? But yeah, Ondo and Sui look really good for that regard, right? Market structure not broken even in the big deeps. Just look at hype. I'm just really happy this got hit. No strong reaction of it yet, of course. So let's see what I'll do with it. Lower time frame management is going to be needed. But if you lose this, then $13.28 is going to be next for hype. I don't see anything else. You have, I suppose you have a 618 just below. You have a 618 at around 1511. But if that's lost, then yeah, I think 1328 is going to be the move. And if that's lost, then I'd just aim for the 886 in my humble opinion. Around $6.28. Trump, we probably get that $10 level soon on Trump, the 886. Because if we lose that, again, I've got no hope for this. I'd see you at like $4 or something. So let's hope that 886 holds. Very simple. I don't need to say anything for this one, right? This is the zone which you want to hold between 12 and 10. This is held. Ultimately, you can start to form a base and go off the fact you have a completed wave structure here, right? And if the wave structure isn't obvious, it's because of this, right? This reminds me, right? If you guys were around in 2022 when Pepe first came out, in fact, let's see if we can pull it up, because I gave an absolutely amazing call on Pepe based off literally very similar structure. And I don't know if data's even going to go that far back. But you know what? Let's do this. Right, when Pepe first came out, right over here, if you were to do this, and we were to go on to something like the daily, what you will have noticed is Pepe had, it's either a shark or a bat if I'm remembering correctly. Very close to a bat, so I think it must be on the hourly. Let me take a look here. Come on. Of course, we have that one. Yeah, there we go. We had this down to, was it this one? One sec. It was so long ago, I completely forgot which one it was. No, it definitely wasn't that one. So I think it would have been this one here. Is this the one I went for? No, it's definitely not. I think it was the daily, because this one's going to give you a really fucked extension. 3.506. Yeah, exactly. Okay, so it would have been this one here. When it first came out, you had this really nice bad structure going on over here, right? And I forget, I think I was using the MEXC chart at the time. I think they had more data, which is why you're not getting a full there. But if you put it here, 873, that's basically an 886, right? You had very similar structure, right? You came down, you know, initial pump, loads of hype, and then you came down, you died, right? And I compared this to Trump, right? It's practically the same, right? And then eventually, like, once you did get around the harmonic structure, right, you got the actual reaccumulation, and then you got your actual insane move up on Pepe from there, right? You bounced, and then you actually absolutely pumped. So, you know, the reason I'm showing this is because this is now something similar that's happened. Trump is trying to do something similar, right? Now, is it going to play out the same? Who knows? We might go to the 886 and we might absolutely die, right? There's no telling what's going to happen, but we can't ignore the fact that, you know, price action very similar to that. If you go up here again, hang on, price action very similar to that. What is going on? Data point. Oh, of course. Wait, hang on. Do that, and then go to Trump. We can't ignore that is looking very similar, right? Now, the market conditions, of course, are slightly different. You know, Pepe came out before the cycle actually got started. Trump's coming out towards when we look like we might have topped out. So there's a big difference in that. But I'm ignoring that. Right now, I'm just looking at it in the sense of the price action has been very similar. So if we can get here and then start the base, then, you know, even if you don't get a Pepe-like run, I'm not expecting Trump to go to, like, you know, $500 or anything. I never say never, but I'm not expecting any of that. I just want to be able to trade this and at least go towards the B point or something, like $38 again, something like this. So that's my hopes for this. So let's see how about this. If we cannot base there, then that's gone, right? The argument's gone. Just don't even look at this. It's fine. Doge, let's take a look. So on the higher time frame perspective, first on Doge, you can hopefully see why this is a very key area. The white box are marked out. 2022 yearly level, 2024 yearly level, 2021 yearly level. If you wanted to widen it, of course take it down, but you don't need to have it that wide. If you want to make it smaller, then you could do it just from 2020 to 2024. You can do just 2024 to 2021. The point of the matter is you're approaching the areas where you want to see a base come in on Dogecoin. Look here, what happened before. Support, resistance, resistance, resistance down here, support down here. So even though it's a bit wide, I'm just showing you the general zone that you want buyers taking control, right? That is this right over here. You have 4 yearly levels all stacked up in this area between 21 to 14. Obviously, we've lost this zone. So as long as we're below this, we're now focusing on this zone here, right? That's probably where you go down towards. And if you don't get to this zone and you reclaim this zone first, you then manage your risk around this zone, right? So in fact, just so you guys don't get confused, let me do this instead. Zone number 1. And then a zone number 2. There you go. This is the area that needs to be held on Doge on the higher time frame for you to carry on going up. If you get below this, that's nasty work, right? We're currently below this zone, therefore what we do is you don't enter where we currently are. You either wait for this to enter again, or you wait for the lower levels to get hit and some sort of accumulation structure to come in there to enter again on Doge. Hopefully that makes sense, brother. Because I know someone was asking about Doge. You filthy goys in the chat, God. Yeah, we look at Aave. We look at Cetus. Good shout. We look at Cetus. Okay. ENA, Aave, Cetus. Okay, so PAL real quick. BAT 886 Type 2 at this rate. You know, I'll be entering at that Type 2 if it's successful. I still have hopes for this project, so let's see what happens. Very easy here, right? 886. You either get in at a successful retest of that, or you wait until you go way deeper into this level for PAL. Okay, so ENA was the next one mentioned, right? So let's go LDO. Finally, this did not hold. Okay, this was looking good, did not hold. Therefore, LDO, I think we're going to get the 886 to the 2.618. I really hope we do. If they don't give us this, they're cocks. Between 81 cents to 62 cents is going to be a beautiful pickup for LDO, in my opinion. Watch for the 886 first. You could very well go to the 2.618, so be careful of that. That's why I put both on the chart. But there's your PRZ right now for LDO. Maybe something like this. Maybe you just literally go and rate that, reclaim and go. But you know, if we do go and base around here, we put bullish structure in, I will be getting LDO in this area. OP probably back down to yearly levels. Yep, I'm not interested in this at this particular area. You're below your M shapes. Yes, you can manage your risk, but it's like even ETH isn't doing that well right now, right? So for now, I'd focus on. To be honest, if you're looking at ETH betas, I'd just look at ENA. Yeah, that was a good shout. We'll go to ENA right here, because this looks structure-wise, this looks better than the others. So ENA, let's go over why I've got this area marked. We've done this before, but let's just one sec, wait for it to load. Boom, there we go. So firstly, ABCD 3.618 and the Macrobat 886 at the lower half of this box, right? What else is in this box? There is the point of control from, if you take the volume profile from the low to the high, right? So the point of control for the move up is down over here. This becomes a very significant zone for me. Because not only that, but there's also the point of control from if you take the high to the low. Right, so this is a very crucial zone. If the white box is lost, then you don't have harmonics there anymore. I'd just be looking for this. We don't have wave structure. You're literally just trying to buy a rate of the range lows. That's it. But in terms of wave structure, ideally what we see is something like this. If you are to go and test that blue box, right, I would want to see again like a breakdown stab, right, and then accumulate up, reclaim, and then go up. Something like this is what I want to see, right? The key here is the ABCD 3.618 and the Macrobat 886 lining up with two previous point of controls. You have time to size up on this. You take pot shots. You take pot shots at these levels, and you save an allocation for when the macro point of control. So now this is the entire range point of control gets flipped back into support. That support, you had accumulation there, you had a nice move up, and then just dumped, right? So until this gets back into support, you're not going to be fully sized up in this anyway. But those are key levels for ENA right over there. Okay, that's what I see. So you're approaching the areas now. It's just a matter of, wait for that. I'd say wait for that 886 to hit. Wait for that 886 3.618 zone to hit before you enter, or just wait for a low time frame reclaim of that point of control there, right? And then try to ride it up to this, and then ride it up higher to the standard deviation 1, so on and so forth. But ENA is approaching very, very beautiful areas. Look, you've lost the 2.0 for now, but the 3.618 and the 886 are still intact. So, yeah, exciting areas to pick up this coin if you wanted to. ENA, and the other one was Cetus. Another good shout. There we go. We have hit. Oh, wait, have we though? 886 settings, coordinates is 0.09. Let us use. Actually, you know what? Let us use this. This is your BAT 0.886. There, beautiful PRZ right here for Cetus, right? So this is the your original Gartley. What was the original call? What was the original I called this back in September? For our September harmonic setup video, you had a Gartley, right? 618, 786, 1.703, basically very close to 1.618 up in this area as well. You had a beautiful Gartley in this area. And you accumulated around that level, and then you sent it, right? So we got in over here at that flip. Now you're literally getting back to those areas we started at again, right? So if you missed the entire move up, you're getting a second shot, a second chance to actually get in. I'd wait for that bad 0.886 to hit, honestly, or wait until you close above the 618. For lower time frames, scalp the swing mindset trades right now, because until an actual base is formed, you don't go straight in for a swing, right, in my opinion, right? So scalp the swing mindsets first. Above 618, you can scalp back to the upside towards 11 cents. Otherwise, I'll wait for the 886. If you lose this, however, and I need to put higher time frame buy seller zones on in this as well. But if you do lose this, then you have some back at 0.07, i.e. September entries, and then Gartley 786 again, 0.06. That would take you. That would be nasty. Let's hope we don't actually go and lose this coin, because below this, lose this zone, because below this is really, really nasty for Cetus. What I can do here is if I go and I group this together, fib retracement, that is no longer needed. Delete that. This and this. No, yeah, this and this clump together. Lock it in place for now. This I can delete because we're below it. Those were your C points and your A points. We turned the C back into resistance, lost the A's, not surprised. Currently at the B point of the harmonic and trying to trade below. So what we are going to do here is I'm going to look after my buy seller zones, right? So lock, fib retracement, delete, not needed at these levels, and this fib retracement, yeah, I'm going to delete it, not needed. Let's do them fresh. So these horizontal ray, this horizontal ray, this rectangle, and this XABCD, and this. I've got copies of the horizontal rays or something. Create a group of drawings. Oh no, of course, yeah, that makes sense. This, group 2, and this also group 2, and this can get deleted now. And there we go, clean chart. Okay, so let's look fresh at what we have. Oh, absolutely nasty work on Cetus, right? So we have your macro read for 2024 right over there, and then coming down to this stage, what we also have is your macro read for 2023 right over there. So let's take the 2024 macro read and make that yellow. Okay, so total area of advisory control back in 2023 is represented by this area. So I'm going to say this is 2023 12-month macro read, buyer zone low. Buy zone mid. buyer zone high. And then in line with that, this is your 2024 macro read. So 2024 12-month macro read, buy zone low. Buy zone mid. And again, buy zone high. Right. Nice. And then of course we can go ahead and put the yearly seller zones down as well. So there's your seller zone firstly. And there is your seller zone here. Oh wait, no, let's not do that. Let's do it the other way around. We go high to low. There, lock it in place. So we can see why we closed here, right? We had a 2024 and 2023 12-month. This is your seller zone mid. 2023 all-time high. Here is your 2024 all-time high, and then your 2024 12-month seller zone mid. There. So we can see key levels coming up at 0.08, and then you have a cluster at 0.05 to 0.03, and then of course you go read the low at 0.02. We can add a few more to this by actually fully incorporating this candle. So we've got the macro read, we've got the seller zone, therefore I'm going to put the buyer zone down as well. Buyer zone is right here, yellow, and we put the 0.1 in this case. Oh wait, no, we do not. Yeah, we don't need the 0. So just the 0.5, and we don't need the 1 either. There, so just an extra layer added on. This is your 2024 12-month buyer zone mid. Perfect. So in terms of key levels, that's everything mapped out. So then we just go to the weekly, right? We see, okay, yeah, we distributed around this area. You're coming down towards your first key level. We can see this in 2024. This has already been validated, right? The 2023 level. So that would be your next key area. If you lose that, we can see you're gonna drop down basically back towards this zone. So your one saving grace is 0.0858, which should basically line up with that bat. So you can see that bat now has confluence, right? Why should this level hold? Why is this a valid bat? Apart from the fact it's a valid wave structure, you're coming down to very, very key support resistance levels. If that's lost, then between 0.05, 0.05 and 1, right? You have a strip there and you have the bottom there. If you lose that, you're going to all-time lows again. So again, you just wait for this level to hit and don't do anything yet, right? There's nothing's been confirmed. Price is heading towards that level. We don't know if buyers are going to act. We don't know if sellers are going to take control. We are only going to know that once we get there and see the interactions between the buyers and the sellers, right? So we need some time for this to develop. But the key levels now are coming up underneath you, right? They're here for Cetus. With how total DeFi is looking, if total DeFi holds, I don't think these are going to go too low. And again, if you believe in SWI and you believe in Aptos, then you should definitely believe in Cetus. This is going to be the #1 DEX for both those chains, right? If I'm not mistaken. So imagine a scenario where we do finally go into our full-blown alt season. Aptos is trading at $30 plus, right? SWI's going towards like $20, $30 plus. If that were to happen, imagine what's going to happen to Cetus. I'm not trying to moon boy bait here, just giving you a perspective on why you might want some on your port, right? That's it. But yeah, that's Cetus. So let's check. Is there anything else needed? Jupe, yeah. I'll look at Jupe. Aave and Jupe. So let's look at Aave first. Are you being serious? I swear I've got a fresher chart than this. One sec. Apparently not. Okay, fair enough. Anyway, Aave down to a key support. You can see that 0.5. That is what we've tapped, right? So this is a buy seller zone somewhere. Very, very key area we've tapped on Aave. But that's going to be a bit hard to see, right? So what I'm going to do is, this thing's got data since 2020. Let's go ahead and create a group of drawings just in case. Nope. Shark. Yeah. Nope. Fibs, easy to put down, so not needed. So yeah, I'll just do this. Okay, let's look at the Aave Fresh too. So, what are we doing on Aave? Let's start from 2024, work our way backwards. 2024. Macro read is up over here. We're just below the mid of the macro read. So let's lock that in place. And once again, this should be 2024 12 month macro read buy zone low. Buy zone mid. Buy zone high. And therefore your seller zone is right over here. I'm going to take the 0 off. Lock it in place. So you have your 2024 12 month seller zone mid. 2024 12 month seller zone low. No. High. There we go. So we can see what Aave did when 2025 opened. Just like we saw with ETH, just like we saw with the totals, you went and you distributed around your 2024 yearly level. Right, that's what it did. Now you're turning your 2024 12 month into resistance. As long as you are below this level, I would not have any Aave. Okay, there's no point buying this here. If you're looking at a higher time frame, very simple, just wait for a flip of this. If this flips back into support, you're targeting $300 again. Okay, if this doesn't flip back into support, then for the high time frame, you're targeting this minimum. For the lower time frame, of course, you're going to be scalping to take out these externals out, right? But below this, there's no point, right? Because this is resistance. So as long as you're below this, if you keep tapping into this and closing below, exactly like this would, so 1 minute entries, right? You see the 1 minute, not 1 minute, sorry, 1 hour. Even on the 1 hour, as soon as your confirmation opens red, you can do something like this. Risk to reward of 3 minimum for me. So there. That would have been the trade that I took, right? If I was watching this for a short, or if you're scalping this, like even you're looking for lower time frame entry models, then in this case, no benefit whatsoever. It's the same. Yeah, it's pretty much the same. You do something like this basically, because you have a close enough to risk reward of 3 shorts already on the lower time frame. But something like Aave, I don't know why I'd look for 3 minute entries anyway. So minimum hourly, you'd enter that looking to take these highs out basically, right? Or you get stopped at break even and you reclaim. If you reclaim, you take a long to try and take these out here. That's only one level we put down though. We know there's way more. So another thing we can put down here is this. This is going to be very, very significant. 0 is unticked. Okay, so I'm going to color this one yellow. This is going to be 23/24 12 month buy seller zone together mid, and this is going to be 23/24 12 month buy seller zone high, right? So if you do keep staying below this level, I would expect to move into this zone, right? So firstly at 129, if you get below that to 100, and again, it makes sense, right? So below this on the macro range, look, you're down here before going up, so that makes sense to us. Now let's look at 2023 as a whole. What did we have, right? There's no point putting 2023 data down in my opinion, not much anyway. If I was to put the 2023 macro read, I'd get one fresh level. We can worry about the 2023 candle when we get to it. You do have a seller zone. Let's instead focus on 2022. Here's your 2022 macro read. Let's make that one like red. Yeah, there we go. 2022 12 month macro read. The macro read is a seller zone high. 2022 12 month macro read. This is the seller zone mid. 2022 macro read, no, 12 month macro read, seller zone low. There we go. So the reason we're bouncing where we are, you can see, is because we have tapped the mid. That's what that 0.5 was, right? Earlier that I showed. That's what this was, that 0.5. We've tapped the mid of your 2022 yearly level. Therefore, you went, you pinged, and you reacted, and you're rejecting off your 2024 yearly level. So you don't need many lines on your screen. You just have significant levels. You can see they speak for themselves, right? You bounced off one, you went to the next, you're rejecting. So if you can hold this area, now let's look at a high time frame perspective. Yeah, right. So look, support in the past, support in the past, resistance, resistance. You distributed around this area before, resistance. If you can hold it into support, you're saying you're flipping a very reactive zone into support. You're flipping yearly levels into support, and you're flipping an area where you've had inverted smiley faces before into support. A place where markets, there's been distribution for this asset, can turn into an area where you could potentially accumulate this asset now, right? The clearest thesis you could get. However, if you lose it, then of course, down towards this next, in my opinion. So that is that's the 2023 levels done, and of course you can go ahead and put like 2022 down as well if you wanted to, right? So how would that help in any way is the question? No, right? It wouldn't really help. All we've done is get one extra, yeah. So 2022 I'll put down since it gives us a few extra levels, but nothing else needed to be put down on top of that in my opinion. So let's make purple's not a strong color. What should I use? Dark blue? No, this one. There we go. Right. This is your 2022. And on the higher time frame, it looks like a load of scribble, right? I know that, but that's because you're not looking for yearly entries, right? You're doing this on the weekly. Once you go to the weekly, these are far enough apart to just even trade between them. 2022, 12 month. This is the macro read. Buyer zone low. So let's copy that over again. There's this buyer zone mid, right? So the 2023 and 22 levels lining up very nicely there. And then here's the macro read buyer zone high, meaning that from here to here, we have one final set of data we can put down. Untick the 0. Here is your 2022 12-month seller zone mid. Here is your 2022 all-time high. Does it ever get hit? I don't know. Hopefully it does. Right on the yearly, at the end of the day, that's not a bearish chart. So okay, that is all the key levels you could want. You do not need to put any new key levels down until 2025 ends. Okay, this is significant levels. This is what it means. No, you don't need to put any new lines down until 2025 ends. So let me say this is your 12 year on the yearly buy seller zones. So I can go ahead and get rid of this. So now if you go to the weekly, if you go to even the daily to make this cleaner, we can see what price action has done. You distributed around your 2024 levels, right? Especially once 2024 actually closed and 2025 opened, you distributed at the yearly level 2024 made, distributed multiple times and then went lower. You've originally found support at your range lows at 2022, key level after 2024 was lost. Once you lost that and turned it to resistance, is when you then fully came down to this area, right? Otherwise you were holding this as support as well. Your 2022 12-month level as support, and look what happened. Very clean. You turned it to resistance. This is what you're looking for, right? Distribution, and then a clean, very clean risk managed area. Right? It's easier to manage risk here than it is to up here. Whether your entry would be better for a short over here, sure, but in terms of risk management, you have a clean now rejection off your yearly level, right? So then how would you take the trade? You just put your stop loss off of that rejection wick. That's it. If you want to account for some deviation, you can do so. But once you have such a clean rejection after deviation, it's very rare that you once again go to deviate. There's only so many times liquidity gets grabbed in the market, right? So if I'd actually looked at this in this perspective, this would have been a short. That would have called on video, but I didn't look at it sadly. It's what it is. TP1, TP2, and if you lose that, of course, TP3 is all the way down over here, right? But now that you're holding this as support, you know, if you reclaim this, hopefully you can see what I'm saying. Your targets are going to be towards 253 again, right? You flip that towards here again. You flip that, you're entering a new zone, right? And if you keep rejecting off here, like you keep seeing the price action like this. Let's say you go above and come down and reject again. You distribute. You open a short over here to try and take this range on RV. But that is RV. It looks beautiful as a chart, right? The structure is maintaining. Yeah, that's clean. Let's see. Do we have any ABCDs? Do we have any wave structure that we can account for? Well, it's not going to be from up here if it is. 786 is a 1.272, which I'm guessing hit right over here at that wick, which is why you had this base here, right? So again, look, why did you keep bouncing off this area? 1.272 for this wave structure was right over there, right? And then you lost it. So that is now no longer valid. Your next wave structure is going to be, so what about if we do from here to here to here? That is a 786. 1.272 for that is down over here. Now you know why this rejection was so powerful, right? Because that wave structure, there's 1.7272 for that, pretty much right over there, right? That is where you went and you rejected. Though that's what sent you lower. Okay, so that wave structure is no longer valid. So the next wave structure that I can see, if we were to take it from this peak, is to down over here. Then you had a pump up, 414. So basically a 382. Now this ain't gonna be right. This is gonna give me a way too deep extension. I don't think Harvey goes that deep, but I'll put it nonetheless. 2.24 minimum. I don't know if Harvey goes down here, but if it does, there's a reason why it's doing so. Right, there is a ABCD going down to 2.24. If you take that A, that B, that C, and that D. But let me leave this one invisible for now, because I think we can get some cleaner ones, right? So if we now consider this peak then, down to here, 618, 1.618. Yeah, another reason why this was bounced is two different wave structures lining up here, which is why this held. That, however, is no longer valid. What about from here down to here? Hang on, here down to here, up to here. 495, basically 0.5. So we're looking for a 2.0. $100 RV if this were to play out. So if you compare that to this, very similar. So actually we've got two different wave structures that's saying we could, if we lose this level and we lose 129 as well, then there's two nice wave structures that line up for us down at these next key areas. Right, so let's turn those two invisible. What about if we did from this peak now? Oh wait, that was from that peak. No, it wasn't. From this peak down to here, up to here, that's a 587, basically a 618. So 1.618. I'm not a fan of this one, to be honest. I'm not really a fan of this one. I'll leave it on, but I'm not really a fan of this one. It's not as clean, but I'll leave it on. So yeah, but currently for Aave, those are just me showing potential wave structures. If you hold where you currently are, and you do this, you're looking to take these out, right? Here first, and then of course level by level. If you don't and you keep, you don't do anything here, right? If you lose this, however, you can now take a short down to here. If you lose this, take a short down to here, or if you distribute on the lower time frame around this level, right? So let's say you go up, you take out some liquidity, come back down, and then reconfirm resistance, inverted smiley faces, then you can try and take the short down here. And if you break down bearish retest out, you can size up on this short over here, right, to try and take down even lower. But what you want to see is this if you want to try and take long on Aave. So that was Aave, and last but not least, let's look at Jupe. Liquidation is 100. Well, let's hope it doesn't go there, bro. That's far away still. But it depends. It depends where you entered, right? Cut a bad long. If you are stuck on where to cut a bad long, like I said, if right now, what you can do is if you distribute around that 0.590 level, you can cut. But ultimately, as a swing, if you can stomach holding it, if you lose this zone, so basically you start closing below that, you hopefully can see why, because you've wicked below here before and still managed to survive, right? So if you close below here on hourly, 4 hours, and up to the daily, so on and so forth, I'd cut. But it depends where you entered. Typically, like, if as soon as the level is lost, I'm cutting, right? Because I want yearly levels, and then looking at weekly structure, daily price action, and then 1 hour for confirmations, and then entering for these coins like Aave, entering 1 hour to 4 hours for my leverage trades. For BTC, when I'm scalping, like 1 minute to 1 minute to 5 minute scalping typically, because higher time frame biases with lower time frame entry models is the best of both worlds, in my opinion. So, for example, if you were to long here and held this, that's a bit risky, right? I wouldn't be doing this. That's not a valid risk management strategy, in my opinion. So it depends where you entered for Aave Magic. Jupe. Let's look at Jupe next. KuCoin. I do have a read on Jupe, and Jupe was fine as long as we were above this wave structure. Where we currently are, we're literally trying to get below where the wave structures are, and you basically arrange lows, right? And not just the fact you at range lows, but it's the fact that current cycle, you're literally losing your entire range low. So if you lose this, you're going to be going into this consolidation range right over here, i.e. your top now is 60 cents, below that is around 51 cents, and below that is 43 cents. This is the range I'd look at next for Tube to see what kind of reaction you get. But I would only add at this range, right? I wouldn't add at this top, right? Because now, even if you add here, what about if you keep turning this into resistance? What was once very important support. So I wouldn't be too hasty in pulling the trigger here. I'd wait to see, right? Do you manage to bounce off it and then reclaim? Because if you do, that looks much better. I'll just add at the reclaim. Otherwise, you just wait until, in my opinion, you hit especially 0.43. Since you've turned this to resistance, around 0.43 next. Look for the rate of these lows, and then maybe from there we can go higher for Tube. I won't do anything where we currently are, basically. No point. Below key resistance is just above some support. Like, there's nothing to be done here. One side isn't showing an edge over the other. There's no point trading in certain times like that, right? So that's Tube. And the last I got was ICP. I've not looked at, I caught a really nice long on this, but I've not looked at it in a while. Oh, beautiful. There we go. If we come down and get this on ICP, I've been so patient with this, you don't understand. Like, I've been looking at this since this C came in, right? And especially after this B got turned to resistance, I've been saying, oh, there's a potential shark here on ICP. I really, really hope we get this. That would be absolutely beautiful. I'm not interested in ICP basically until we get that shark right now. Because where we currently are, I still have a bit of my ICP open from I got this one actually super low. This was one of my 2023 calls, so I still have the moon bag of that left open on spot, right? So I'm only going to size up either once we get a clear confirmation that our low is in. I don't mind sizing up a bit higher, or if you go and actually absolutely murk this the shark here, right? You go start accumulating there. If so, wave structure wise, I've got a reason to. I'd go into there, right? 1.618, 886, lining up very nicely at key levels. That's where I look to size up on ICP. Do we have any ABCDs? Let's take a look. That is a 581, 618. So nope, not that one. Let's go to the daily to get a bit cleaner view. 1 second. What we really want is 382s because they give you the deep extensions. Like 72, no, you basically not that. Okay, let's see over here to here. That was the 581. Basically a 618. So 1.618 is up here. You've lost that unless you reclaim that. Not good, right? That 1.618 over here. If you reclaim that, you might be able to take a long back towards this. If you don't reclaim that 1.618 here, however, just go ahead and draw a line at the 1.618. If you can't reclaim that, then this is the next level I'll be looking for. So what else do we have here, right? We have from this, I don't think we have anything else, to be honest. Absolutely just massive sell-off, peak price action. We have the 618. Again, the 1.618 is already going to be had. Yeah, the 1.618 is basically right here. So that's not valid. Yeah, okay, we genuinely don't have any wave structures in terms of ABCD that take us lower. So it's the shark. We go with the shark right now. You can go ahead and try and get your 12-month levels down, of course, right, based on the buy-seller zones. In fact, there is a 12-month buyer zone from 2024 right over here. 2024 12-month macro read buy zone low. No macro read, this is just a buy zone. (2024) 12-month buy zone mid, buy zone high. What we're currently doing is we're at the lows of your area where buys were active in 2024, right? So if we do manage to keep on basing around this level, we might not actually get this, looking at it like this now. But if we do something like this, or even if you go here, put another lower high in or at this area, right? That would be a trigger to short to try and get to that next level if we do get some sort of relief pump and another dump on ICP. Of course, there's way more 12-month levels we can put down. So this, create a group of drawings, and we're going to hide that. So that's there. We have your 12-month macro seller zone over here. What about the buyer zone? So if we do this to here, this is 2023 12-month macro read buyer zone low, 2023 12-month macro read buyer zone mid, 2023 12-month macro read buyer zone high. So I'm just going to put down the relevant levels for now. And then last but not least, that's fine for now, to be honest, because this macro read is going to be pointless. We're just going to get an extra level, that's it. I'll put this one on, that's it, yellow. This is 2022 12-month macro read, and this is seller zone low. 2022 12-month macro read seller zone mid. 2022 12-month macro read seller zone high. And above this, of course, we got some ridiculous wicks, right? I'm not even going to bother plotting that down. But again, we can see, why did we reject here in 2024? It was your 2022 yearly mid, right? So we go to the daily, we can take a look at that rejection. You came up, you pumped up in 2024, went, tapped it, went under, and then that was it, right? You hit, you went down. So we've got some levels locally speaking, right? Of course, there's going to be more levels we can plot higher. I've only put down the lower levels here. I've not put down this seller zone. I'm going to put down this seller zone here, right? So there's a few I've not done, but we just need to worry about what's here right now, and that is if you lose 585, $3.93 would be next in terms of yearly levels. But we know there is a stop off point there. We could literally, that'd be nice, right? Because you could do this, and then base, and then go up off a yearly level. So that's why I'm really liking this harmonic setup here for ICP. Down over here. Let's see what we get though. So 12-month BSZ. I need to add to that in the future, but that is ICP. Right, I think okay, I'll do LTC. Last one I'll do, and then I'm gonna dip. Okay, Litecoin. Poloniex, is that a good one? I'm using master list. Let's go to focus. There. LTC looks good. Trend being respected. I mentioned this one back in July of 2024 when this was happening. So the 87886 getting tapped, right? Accumulation lows come in. If we do go and sort of get below, let's say this level here, then we could potentially be deviating right here. So yeah, if you turn this to resistance, you could very easily head back down towards $57 on ICP. But very simple right now, just literally in terms of fibs, 764, 786, 88.87 and 97.96, right? Those are the levels you need to hold. Very obvious reasons. Resistance in the past, resistance in the past, support in the past, resistance, literally distributed around there in the past, resistance, right? So if you hold this zone, 97.96 to 88.87, you're fine, right? Maybe something like this. If you don't and you start doing like this, then I'd be looking for $54 to $47 LTC again. Very simple for this one. So that's that for LTC, bro. Right, guys, I'm going to end this one here. It's been going on for a little bit of a while now. I'm back properly now, so you know, I'll be back to my normal streaming schedule. I'm taking students on again, so if anyone is interested in the way I trade, just reach out to me and we can get one-on-one sorted in DMs. Otherwise, just catch me in my YouTube videos, catch me in my streams. If you have any questions, just ping me in chat, and I'll talk to you guys soon. Yeah. Let me just see what's happening in terms of Bitcoin. Oh my god. Nothing, it's just chop. Chop that is sending us lower. Right, let's turn this off once. See what happened in our key areas. At the lows. Aggressive selling going on at the lows. I wouldn't be surprised if these got trapped. Loads of buys coming in. Nice. We'll see. High, low. We could go to run these on the local time frame, like run them and then come back down, but we'll see. A bit of scalping mindset. There we go. What about in terms of TPOs? 1 second. Time price opportunities telling us that we are point of control. Okay, we're very nicely weighted actually. Locally speaking, this is a balanced market. Calm. Okay. We'll see how it develops the rest of the day anyway. If something crazy happens, I'll let you guys know. But yeah, thanks guys. I'll talk to you guys soon. Yeah. That was footprint, right, bro? And then this one here is TPO, time price opportunities here. The other one is footprint, and this is depth of market as well. Hang on, let me click this. Yeah, this is footprint here, depth of market. Doesn't matter what software you use, Bybit, Coinank, Atas, Sierra Charts, whatever you use, it's gonna be the same. TradingView, even TradingView's got. This is good, to be honest. More time I'm just using TradingView when I can't be asked to have multiple screens open. But yeah. This one is Atas, bro. I'll run some. I can run some streams on my own server over Atas, because for our advanced we're gonna be doing it mainly on Bybit. Coinank's got paid now, so crypto is no longer free on Coinank. So we'll still be sticking to Bybit normally, but in my own server we can go over Atas, so that you guys know how to use it properly. Okay, sounds good. Anyway, I'm gonna end this here, guys. I'm gonna stop the recording.